Okay, let's see how we can work together today. Um, all right. Okay. All right. Good morning, everyone. Good afternoon, depending on when you will be seeing this video. This is a live session that we are supposed to have, but because we have system glitch and the internet is so bad, we thought it wise to just record this so that it can be available uh, to every of our subscribers and of course to every of our community members. So today this is going to be the global macro with the king of waves episode number 5, and today is the 10th of February 2026. We want to look at the forex market together from the global macro perspective. We want to overview different assets. I want to look at the fundamental, the sentiment, and possibly the technical storyline behind the expectation of the movement of those assets for the week, between this week and next week. And this is how this is what we do every week. Usually on Tuesdays, we look at the market, the forex market, from the global macro perspective. Then we project the movement of the market for the week, or we explain the expectation for each of the assets that we are able to analyze for the week. So today we are still going to start with the technical analysis like our usual practice. And of course, when I say technical analysis, what we usually do when we get to the fundamental analysis, I mean to say, I beg your pardon. The fundamental analysis, what we usually do when we get to the fundamental analysis phase, which is the first phase anyway, is that we look at the summary of all the macroeconomic indicator for each of the countries related to the 8 major currencies of the forex market. We look at the interest rate because that is the summary of all the macroeconomic indicators in the past 1 week. What is the stance of the interest rate? I've said this over and over again that forex market is the game of interest rate, and you don't want to shy away from the position of interest rate when it comes to forex market. So we want to overview the interest rate of all the 8 majors, and of course we can now add Bitcoin and gold to our analysis when we get to the sentiment phase of our analysis. And then that makes it that we have 10 major focus assets. Then we now begin to pair these assets to now see which currency pair can we be looking to trade for the week. So to start with, we look at the interest rate standpoint as of today, 10th of February 2026. And to do that, we look at the forexfactory.com, and where you see the standpoint of the interest rate as of today. And if you can see my screen, you will see that for Australian dollar, the interest rate as of today is 3.85, which happens to be the highest amidst all the 8 majors, and the lowest is the Swiss franc. uh, Australian dollar followed by GBP 3.75%, US dollar 3.75%, Canadian dollar and New Zealand dollar, they have 2.25% interest rate, while the euro maintain 2.15%, and the Japanese yen has 0.75%. Now this interest rate is a global indicator that investors they look into. And if you want to play in the forex market and you want to play from a professional standpoint and you want to stay in the game for a long time, you need to begin to consider what is the standpoint of the interest rate. Is very very important. You cannot talk down on the importance of the interest rate in the forex market. So what we usually do is we look at the stance of the interest rate, just as we have done. Then we'll now overview what is the expectation for the week. Are we expecting any news event that can shift the standpoint of the interest rate of these 8 major currencies? So what we do is we look at from Tuesday. Usually we come up live every Tuesdays. Today we are recording this video because we have internet issue, so that some of our subscribers will not be left out on what is possible for the week. So but we come live, then we do this live. This is expected to be a live event. So but then, because it's recorded, I will just like we do when it's live, I will just overview what are the events that we are news events, I mean to say, that we are expecting for the week, and which of these news events might likely shift the narrative of the interest rate for the week. Note that all other economic indicator, all other macroeconomic indicator, there is a way they dovetail into the interest rate decision of the central bank, and that is important for you to know, so that you know over you know excuse me, so that you no over rely on a news event to say maybe the GDP news event is coming out, and you want to be taking your trade excuse me, based on the data release for the GDP. You might be doing yourself more harm than good if you do that. So but what we do is we just look at those events. Maybe if this event comes out, for instance, this GDP month on month, usually GDP month on month is not so strong to shift the narrative of the interest rate. If it's quarter on quarter, now we can now be expecting that there is likely going to be a very notable shift in the interest rate narrative. And of course, when we overview the expected news event for the week, we just want to know, so that we'll know what is possible in the course of the week, so that we'll not be caught unawares. It's not as if we are following the news event to take the trade. You get it now. So we overview for the week. Today is Tuesday, 10th of February 2026. Today we have core retail sales month on month. This news event, as important as is been acclaimed here, is not going to directly shift the narrative of the interest rate immediately. All other things must come together before the retail sales can shift the narrative of the interest rate. So we are expecting that for today. Tomorrow we are expecting non-farm employment change. This is employment data, and this is very central in the discourse of the interest rate for any particular economy. So for instance, for USA, the non-farm employment change is very important, and the expectation is that there's going to be an increase in the non-farm employment change, which means that we are expecting that the employment level should go higher, and this has a positive projection for the interest rate. So for the week, by Wednesday 2:30 p.m. Nigerian time, we are expecting that the data released for non-farm employment change might likely shift the narrative of the interest rate for the in the nearest future. Note that when this data is released, the policy makers, they are going to now begin to analyze this data set so that they will use this data set as a reference point for their interest rate decision. However, our own task is to just overview the expected news event for the week, for each of the 8 major currencies. So we have on Thursday the GDP month on month. You might need to take note of that. Then on Friday 8:30 a.m. we have the CPI news, that's the inflation news, I want to let me quickly say this. The news that you are expected to take cognizance of include the GDP news data or the GDP data, the inflation data, and the employment data. These are the three data sets that you really need to focus on. Of course, all other data sets might sound like as if they are important, but let me tell you, whatever will happen to the interest rate will come from these three economic indicators that I've mentioned. The GDP, data set, the inflation data set, and of course the employment or unemployment excuse me, data set. And this is very important so that you not just be following all the news events as if they are important like that. So having said that, let's just quickly go into our sentiment analysis. What do we have on the sentiment storyline for the week? So like I used to say, our sentiment storyline, we have 5 major indices that we overview, and we do this so that we can be able to say specifically that this is the risk overview of the market on the global scale. So for this week, we are still going to overview this, and we are going to see what do we have for each of these indices, or for each of these index, as the case may be. So we start with the S&P 500, and like I used to say, your assignment when you come to the sentiment indices is to look at what is the structure, the predominant structure of each of these indices, and we use these 5 indices to come up with a conclusion of the sentiment overview or risk sentiment overview of the market. So starting with S&P 500, just like we have it last week, the predominant structure is still a bullish structure. So it means that the risk sentiment overview based on S&P 500 is risk on, which means that investors, they are still maintaining a level of confidence in the market to say that they are ready to risk their money. What that means is that investors, they will be pushing their capital more into assets with high yield, and they will be withdrawing most of their capital from assets with low yield. Yield, I mean to say interest rate. You see how the fundamental is now connected to the sentiment now. So yield means interest rate, because they want to make money. When an investor moves his money from one particular country or currency into another country or currency, they are moving the capital. That capital is flowing because they want to make money. So the differences or the differential in the interest rate is one of the things that investors consider, and that is what they call the engagement of carry trade. Engagement of carry trade, where you buy assets, with you borrow money from a country with a low interest rate, and you now invest it in a country with high interest rate so that you can make money. And of course, by the time you pay the interest rate on the capital that you have borrowed, you still have excess. Do you see that now? But that's just by the way. So let's just overview other indices so that we can just come up with a conclusion as to the risk overview of the market as of today, 10th of February 2026. So the next index is the Nasdaq Composite Index. Around last week, this index pushed down a little bit, but is now back, moving above the cloud. And of course, the reason why we use more than one index is so that we can have validation for our decisions. You see it now. So S&P 500 is still above the cloud on the daily, still maintaining a bullish, predominantly bullish structure. Then the Nasdaq Composite Index is, although there is a little bit of reflection of panic in the stock market as measured by Nasdaq Composite Index, but then by the time we now view this Dow Jones is now still now validating the position of S&P 500. So in all, we have overview of the stock market on the global level to still maintain a risk on template or a risk on sentiment. So the next thing we do is to look our the VIX, which is the fear index or panic index. Our gauge is to, or our focus is to look at the VIX. Then we want, how far is the VIX from 20? Is it below 20 or above 20? You see that the VIX as of today, 10th of February, is around 17.46, which is below 20, which means that there is a level of stability in the market. There is no fear or panic in the market, which means the risk on narrative is still being validated by this fear index now. I hope you get this now. If you have been following us, this should not be strange to you. And of course, we want to believe that if you are seeing this for the first time, you want to really take your time to understand the essence of some of these indices and why we are overviewing them, and so that you will know how important it is for you to be able to pick the asset you are to trade. The narrative is that for you to trade in the global market, because forex market is a global market, you need to overview what is going on from the global perspective. You don't just want to trade because you feel like trading, or pick an asset because you feel like trading it. You want to see what is the global narrative, what is the summation of the overview of the big banks, of the hedge funds, of the big investors around the globe. And that's what we are doing now. So having said all of this, the next thing you want to look at is the dollar index. And like I used to say on each of our live events, when you undermine the position of dollar in the market, you are going to burn your money, over and over, because dollar is the king. Dollar is the king of the forex market. Whatever you want to do in the forex market, as long as it's the forex market, you want to pay close attention to what the dollar is doing. And of course, the dollar index is giving us a very clear perspective of what is the position of investors when it comes to dollar. Are they really optimistic about the United States economy as it were? Or are they really having a particular level or a level of doubt, as to the stability of the economy of the United States? And that is what dollar index is going to show us, which is the DXY. And this is the last index we are going to consider. And of course, if you have the daily, if you have the price below the cloud on the daily, it's clearly showing that there is a level of dollar aversion, which we call dollar dumping. So the tone of the market now, as of today, 10th of February 2026, is that we have a risk on dollar aversion risk sentiment. Let me say that again so that you can understand. By the time we now get to the chart and begin to pick assets now, we'll now begin to use this particular risk overview or sentiment overview to pin down the direction of capital flow of each of the currency pair that we are going to be analyzing. So the conclusion from our fundamental and sentiment analysis is that there is risk on dollar aversion. There is risk on dollar aversion. So let's now begin to pick different assets so that we can now project what are we expecting for the week. And of course, I want to make this video as short as possible so that whoever will be seeing it for the first time, given that it's not a live video, is a recorded video, you will not be discouraged. So we are going to first start with the gold. Our analysis, we are starting with the gold. Last week, we projected that we are still expecting a buy on gold. Now, because the sentiment narrative of the global market is still the same thing as last week, our expectation for gold is still going to be a buy. Our expectation for gold is still going to be a buy. And what we usually do is that we want to look at the weekly. What is the directional bias to now confirm our position of the sentiment overview? Now, the directional bias is still saying buy. And what is the rationale behind this buy that we are expecting for the week? Anytime you have dollar aversion, you can expect that because the gold is paired against the dollar, when there is dollar aversion, you can expect a level of capital to be flowing into the dollar. Dollar aversion or dollar dumping or sell American narrative is one of the reasons why gold will buy. So now, having said that, from the sentiment overview, we now get to the technical storyline. We look at our directional bias. It's still a buy. Then we go to the daily. On the daily, we are expecting that this market is going to clear this high. We are expecting that this market should clear this high. Once gold clear this place, once gold close above 50.92, our buy position is now loading up significantly. I want you to pay close attention to this analysis. You know, this is not a case of something has happened and we are now trying to, analyze it as if we are the guru of the market. No, we are using our template of analysis at the platform level, to analyze the market from the fundamental to the sentiment and to the technical storyline. And what we are doing is we are connecting the fundamental indicators to the sentiment overview of the global market. Then we are now looking at the technical, overview of the market to know where are we to position to enter the trade. The essence of the technical analysis is to know where you are to enter the trade. Now, the essence of the fundamental and the sentiment analysis is to know why you are entering a particular asset. Why are you buying a particular asset? But when you come to the technical analysis, you want to know where you are to enter it. So for gold, we already know why we are buying it, why we are expecting a buy. We are expecting a buy because the sentiment overview of the global market is risk on dollar aversion, which means largely there's going to be, we are expecting that in the course of this week and into next week, there's going to be a bit of dollar dumping, which means that we expect that because gold is paired against dollar, that dollar dumping narrative is going to push gold a little bit high, among other things. Are you getting it now? And of course, when we do our analysis here, we always emphasize that all other things held constant. That's very important for you to take note of. So now for gold, we are expecting a buy, and we are saying that before you can position for a buy, as it were, expect that gold close above 50 or 5100, 5100. You get it now. Expect that gold close above, and if all our analysis, like we have projected this, stands the same, that nothing changes, gold is going to push above 5100. When it does that, you will now be expecting to take position on gold depending on your trading strategy. But if you want to use the PMI cash flow trading framework, you can connect to our Telegram channel. I'm going to leave the link on the description of this video. You can connect and be a part of the community that we are building, so that when all our conditions are met, we can now call out a trade on the Telegram channel, and we post all the signal there. We'll post the we are going to the where to enter, the stop loss, the take profit. We are going to post it on the Telegram channel. But if you have your strategy and you know what you are doing and you have confidence in it, allow gold to close above 5100 or 5100. Then you can now begin to look out for a trade opportunity. Having said that, let me just quickly look at one or two other assets so that this video will not be too long. Let's see. BTC, we projected BTC for a sell last week, and it delivered just like we have said it last week. If you can look at, you can overview this channel and listen to last week's projection. We projected that Bitcoin will come to around 60,000 or 63,000. I think it was 60,000 I mentioned last week, and it has already delivered. We caught a trade on this, and we posted the trade on the Telegram channel. I don't know, for as many that picked it, this trade was our saving grace for last week. It delivered profit for us, and we were able to recoup some of our losses on other trades. Do you see that now? So let's look at so for BTC, we are expecting a correctional move for this week. We are expecting a correctional move back to somewhere around this place. A correctional move back to somewhere around this place. All other things held constant. We are expecting that BTC should correct back to somewhere around this place. It's still going to sell, but we are expecting a correctional move back to somewhere around this place. Somewhere around 75,000. You see that now? So if you want to enter a position on BTC, my advice is that you wait. If BTC can come to 75,000, then you can now, based on your strategy, be looking out for a sell position. But for now, because we have understanding that the market moving wave, there is likelihood that this particular correction is still going to push to 75,000, because on the weekly we are expecting a correctional move. This is an impulse move, and these are delivered a full impulsive move. We are expecting a correctional move. So if BTC will sell, it will now be selling from around this place. Then we expect it to come to maybe around 45,000. You see that now? BTC will now come to around 45,000. Then we can now be positioned for a massive buy or change of trend in the favor of the buy by the time it's around 45,000. These are the things we look at, and of course it's not as if we know what will happen exactly in the market, but because our analysis is based on global macro perspective, we are certain that some of our projection will play out, all other things held constant. So that's for BTC. For Euro USD, last week we projected that we are expecting a buy, and because the narrative is still the same thing, we are still expecting a buy on Euro USD. And of course, because of, I don't want this video to be too long, this is going to be the last asset I'm going to overview. Euro USD, we are expecting a buy on Euro USD. Why are we expecting a buy on Euro USD? The narrative of the global market as of today, 10th of February 2026, is risk on dollar aversion. Now, dollar aversion means that people will be dumping dollar predominantly. And anytime there is a dump of dollar, euro is going to gain strength. So expectedly, we are expecting euro to still climb up to this position. Euro should come very close to 1.2200. We are expecting euro to come here. All other things held constant. Of course, you will only enter the trade when your conditions are met. You see now that on the weekly, we have the directional bias is a buy. On the daily, the tide is a buy, and the structure of the market is a buy already. You see it now. So we are expecting this correction to correct, and plus or minus, this will correct like this and give us a move from here, and give us a move from here, a slight move down like that. Then you have something sharp like this, something like that. You get it now. That's what we are expecting for Euro USD, and this is how we analyze each of the assets. Last week we analyzed CHF JPY, and I said we are expecting a push up for CHF JPY. As at last week, the trade was here. This was where the trade was, and I said we are expecting a push up for CHF JPY, and it delivered, although it did not meet our condition for entry. And of course, once our conditions are not met, we'll just allow the trade to go like that. Even when we know the direction the trade is likely going, we will wait for all the conditions to be met. That's how we trade at Potential Miners International. I want to encourage you to connect with us and be a part of the community of traders that we are building, at the platform level, so that you can learn how to trade from a professional, standpoint. Until I see you in the next video, I remain Mr. Akimbonde, the lead analyst at Potential Miners International. My name is the king of waves. Don't forget that. Till I see you, God bless you. Stay profitable. Don't blow your account. Thank you for listening. God bless you.